Yeah, what's going on, everyone? It's Top G Trades with another video. Today we're gonna make a weekly outlook, a Sunday outlook, and also we're gonna do a November 2024 winners review and also losers review. So we'll review the previous week and we'll also do a weekly outlook for Forex, and we'll also do a weekly outlook for indices and gold. So let's go back to the previous week. So we were trading every day on the previous week from Monday till Friday. So we can consider it as over trading, but we're still getting results and we're still doing well. So that's the chart of GJ. So let's close them. Let's close the YouTube tab and let's just focus on the previous week's trades. So on Monday we took a GBPJPY short that we covered on the previous video. So we shorted GJ on a support level, on a resistance level, and it dumped down to the take profit. We made 400 bucks. I was having $1,000 account and I didn't actually want to risk the whole $1,000, so I decided to just keep trading the profits I made from the 1,000. So I ended up making 1,800. So I made an $800 profit, and I wasn't very happy with the profit. So I wanted to risk 20% per trade, which I normally risk 10%. So I was risking 20% on the US500. So on the US500, like everyone thought, oh, like we're gonna reverse anytime now, yeah. So my strategy was simple. Like as soon as we break the minute 5 trend line, and that was also a daily support resistance level, I was looking for the pullback. You see, that's a daily support resistance. So I was looking for a pullback in US500 and US30. So I was shorting like I had so many minute 5 divergences. So as you can see here, divergence, so many divergences, but price just kept going up, kept going up, kept going up. So I was shorting, like I shorted, so I was shorting all these price ranges. So I've seen, oh, now that's a good signal to short, yeah. We broke the trend line, so I thought, you know what, it's probably going to go down. I also like drew another trend line like that. I thought, yeah, we're going down. Like you don't see what's happening over there, yeah. And you see price all above resistance level, and you see divergences. You think, oh, we're going down. But in actuality, it just kept consolidating and going up until it went all the way to 6,000. So I was in two positions, in US500 and US30, but I'm not very mad at the losses, although they're the biggest losses, as we can see, like negative 600 in only two positions, which I worked 2 weeks to build that much money. But at the end of the day, it's free money, yeah. It's on the house. It's covered on the house. Like I worked, I made the money, so I'm not sad that I lost something from my pocket. It was just money that I got from the market, and I just gave it back to the market for being someone irresponsible, not over leveraging. Because the thing is, if you risk 10% and you go into win streak and you keep winning, you're allowed to re-risk the profits and risk 20%. That is fine and allowed. The problem is when you lose and you risk double. That's the problem. Since you're losing and you double the risk, you're doubling the risk or martingaling, depending on, unless you have a strategy and you're profitable and journaled, that's another story. But for me personally, what I found out when I scale in, especially when I'm losing, I'm just losing even more. Especially when I'm over leveraging and losing in a lose streak. Lose streaks are coming for everyone. So I'm not talking about like, oh, the DCA strategy where you draw support resistance on major levels, and you keep adding on major levels. I'm talking about when you lose, you just, for example, in some random level, and you double the risk in this level, yeah? Instead of having a clear defined, predetermined, clear defined strategy with a controlled risk, and you keep adding to losing positions, that's another thing. But that was last week, so I think we covered the bad news. So I started retrading on $100 account since I lost all my confidence, but I'm still trying. At the end of the day, like I thought, you know, I wouldn't say I want to chill because I kept trading, but also I said to myself, now I had a big loss, I withdrew, like I still had the, I was still green, by the way, even with the loss. So I deposited $1,050 and the account had $1,200. So I still had 100 and something bucks in the account, on my Trader's Way account. So I withdrew the 1,100 bucks withdrawn, and I had 100 bucks, 100 and something, 120 to be exact, on the account balance. So I still had 120 account balance, and let's open MetaTrader. So out of that 120 bucks, I turned them into 315 bucks. You see, we tripled the 100 bucks within less than a week, going into a big fat win streak. I wouldn't say that's normal, since it's a small number and the psychology side of the trades was so easy, because at the end of the day, you see negative 20 bucks, negative 50, plus 20. Like I remember seeing negative 500. That was something that scary, but negative 50 ain't nothing, yeah. But we longed gold on Thursday, London Open, and I've seen gold dumping. If everybody remembers the gold dump last week, so I've seen the gold dump, and I waited for the 4-hour time frame to show us clear signals to enter for longs, because at the end of the day, when price goes to support, it grabs liquidity, and at some point people are going to come in and to go inside the trade that I took. So I went into the 30-minute, if I remember. So signal number 1, 30-minute engulfing. But I didn't FOMO, because I don't think I've even noticed that. But even then, I was lucky, honestly. I was lucky, because if I saw that, I would enter and have a stop loss below this, because you don't see this, yeah? But what was more convincing, like, when you see this going up, you think it's likely going up, but it's not 100%. But then when you see price retesting the initial bounce, you don't want to enter, yeah? So I didn't see any another buy signal until this minute 30 bullish engulfing. So I've seen minute 30 bullish engulfing in the daily support resistance zone, or weekly support 2650 level. So you draw a weekly zone over here. If you go to the weekly, you see this big fat wick, and you can also draw another level over here, and you can go to the daily, and you can also adjust the daily, and you can also draw a zone, yeah, in the daily. So a big fat zone, daily 4-hour zone. So that's how the zone looks like. Like, it covers essentially the whole thing. Price actually made a fake out and a shakeout to take all the buyers out, especially, like, you know, for all the market makers and the big money, big banks. All they love is to take your money. They don't care about you. All these unregulated brokers and all these forex gurus, the people who try to sell you a course, and then forget about you 2 days later. All our their job is just to take your money. That's their job. They don't care about your situation. They don't care about you, because in the jungle, that's the reality. In the jungle, the animals don't care. Yeah, they just want to have food and they want to live. So even if you thought price is going in support, you shouldn't blindly enter, because if you blindly entered, you'll just get stopped out. Like if you had an entry, especially if you had a tight stop loss, you should be out. Especially if you entered as soon as the price came into the middle of the support resistance zone. Especially the people who had limit orders, they all got stopped out. And also the people who had a sell stop order, for example, so the people who sold as soon as price, they had a sell stop, which means if price goes below the support resistance zone, and they had a stop loss, for example, above the zone, or maybe above this wick, that's a 4-hour wick, yeah? So they had a sell stop and they anticipated the move to go all the way to the next support resistance zone. They also got stopped. Why? That's how the banks work. Because the banks, they don't even make money from sellers, from buyers when they get manipulated. They also take the sellers' money. The sell stoppers, they also lose. So both people lose. That's what manipulation looks like. But to be positive, you've seen a minute 30, as we recall, in gold. You see a minute 30 engulfing below a daily support resistance zone. How do we know it's a daily support resistance zone? You go to the daily. That's an O1, the chart. It will look different on FXCM, but it's all the same basically. So you go to the daily, and you, as I've shown you, I went to the weekly. You look at these wicks, clear wicks, and you just draw a key level on this wick. You see 1 touch, 2 touch, 3 touches. Maybe you want to adjust it. You know, the more touches, the better, but it's impossible. Like, it's a zone. At the end of the day, this is why I have a rectangle, because it's not a precise area where exactly it will go, and it's not a promise. It's a probability. But when you see a signal in the zone, that's giving you the green light to enter. So you see a bullish engulfing candle pattern in this key level, 2660. So in the 2650 support resistance level on gold. So what you could have done, you could have went into the minute 30. You could have placed a long position, especially like this big bullish, strong bullish confirmation after the bullish engulfing pattern. You had a green light to go for long and target the next support resistance zone. So you easily made a 1 to 8, and if price could wanted to continue to the next support resistance zone, you would have made a 1 to 3, but you could have always had an opportunity to close. So you could have always went to the daily, draw a line over here for take profits, and you see, you could have safely got out. Safely and securely got out. Especially like over here, or yeah, like that's the safest. The first, the final extreme edge is the safest, because you know sometimes it goes deep into the range, sometimes it just touches the extreme point and then it immediately goes against you. But you still made a almost, like, you see, if you had the perfect entry, for example, in the minute 30, after you see the bullish engulfing confirmation, and you place a stop loss below these wicks, you could have easily squeezed the 1 to 3 risk to reward. And you could have possibly also, if you held it long enough, you could have held a 1 to 5. But you know, once you go for a 1 to 2, like, you shouldn't ask for more, honestly. You're straight greedy. But yeah, these are the possibilities in the right circumstances. So that was the gold trade in the last week. By the way, you see this whole analysis, we only made 30 bucks. 36 bucks to be specific and precise. As you see the comments, long gold at the daily support resistance zone. Price went below the daily level to 670 and formed a 30-minute bullish engulfing candle. Risk 10% out of $100. So we risked $10 and we made $36. I'm more than happy to take that. But these winners add up, especially if you risk 10% on a live account. That means you're risking 1% on a challenge account. So it's nothing, 10%, especially if you're not a millionaire, you're risking 100 grand or a real 100k, or you're risking real $1 million. Okay, 10% is, but we're just inside the 95 whatever, so it's a tiny amount. It's not your whole life savings in a FX account, so it doesn't matter. So I don't want to go through all of them because then the video will be 20 hours, but I want to go at least through the winners so we can understand how we won last week. So let's cover the USDCHF short. So in USDCHF we saw a daily level, and we've also seen that's a minute 30 chart, so we also seen a bearish variation pattern, and we also saw another bearish engulfing candles pattern formation. So we sold, and that's how the results looks like. We took profit, a safe take profit, because we had two zones that are exactly near each other. Yeah, so I didn't want to gamble the trade, especially it's so small, especially it's on New York Open, so it can easily flip up. So I thought, yeah, just take profit on the next daily support resistance zone and secure profits. I think it's a 3R, yeah. So if we risk 10%, we made $28. That's so good, yeah. Okay, so loser, and let's see AUDUSD, because I know a lot of people are interested in this pair. So for AUDUSD, so that's how the zone looks like on the white line. So I thought we made a break and retest, especially when I thought when I saw price reverse on this specific point. I thought that was the resistance, and I thought we broke resistance and we're going up. But in actuality, as we just spoke in the gold trade, support resistance is a wide zone. So if we drew it in the daily, I drew my zone this way. So in the hourly chart, I didn't see this, so I saw this. So I thought, yeah. Now we failed to go lower, especially we went through it, but it turned out to be a fake out, and it just went up and down. So the support resistance zone was actually this fat, or maybe this fat to be specific. And yeah, price just tested the extreme side of the zone, made a bearish engulfing in the hourly time frame, then made another bearish engulfing, then made another bearish variation. And you know, at the end of the day, if you see all of this, especially double break of structure, you could have simply sold again, and yeah, you could have squeezed 1 to 3 risk to reward. But it's confusing, to be real with everyone. It's so confusing. And I also traded against the trend, because the trend was still, if I believe in the high time frame, in the daily and H4, it was still also second guessy, because in reality it made a fake out. In reality it actually made a fake out. But it was difficult to actually identify the fake out. And also, this trade was a loss simply because it was placed in the low time frame, in the hourly chart. Because if it was in the 4-hour chart, then it would definitely be a confirmed break and retest above the zone. But since it wasn't the hourly chart, then it wasn't 100% confirmed. But it was still it was looking bullish at least for 3 hours. So let's keep. Let's check it. Let's check the trade in the minute 30. So even in the minute 30 it was looking a little bit bullish, but also Australian dollars. It's so. And the zone was actually wasn't only this, was the whole thing. So yeah, having you had to have a bigger zone. So let's adjust the zone to the way we lost, so it doesn't happen again. And where's the next daily support resistance zone on the AUD US dollar? I think it's over there. So yeah, you gotta chill until price goes all the way to the next daily support resistance zone, and then let's see what happens. Yeah. But for now, this pair, like, I don't want to even look at it, bro. Especially, but it wasn't a big loss. I know, like, I'm always strict on my losses because I don't want to make it a normal thing. Because when you lose, although it's normal and natural in the markets, but you don't want to repeat it. This is why you always need to learn the lessons from these losses. For the winners, we went into the New Zealand CHF weekly level 0.525. It's a lower time frame screenshot, so it's difficult to see, but that's a higher time frame picture. And yeah, we saw a hourly engulfing candle pattern in the weekly 0.525. So this key level was drawn on the weekly, and the zone I drew in the daily. And that's how the trade looks like in the 4 hour. By the way, I got stopped out in the broker side because my broker was unregulated. So during Asian sessions, especially, the stop loss was so tight. So the spread's open, the price goes all the way up. Although it never came up, but adding spreads, it hits your stop loss and you end up losing the trade. But I still re-entered. I made 16 bucks. It could have been a, I'm not sure, like, but it could have been a big fat risk to reward trade, yeah. So we entered at 0.5 to 495. Five to 714. So we closed at what? 5 to 1. 1 to 5, 1 to 2, but it was still a fantastic trade, yeah. But you get stopped out because of a broker. But the you should think about it, like, why I'm trading on an unregulated broker. It's so simple, and it's basically because if you want to withdraw in a regulated broker, it takes 20,000 days to get your funds to your bank account. It takes so long. In an unregulated broker, it takes 5 hours, 6 hours max, maybe a day or two, maybe. But I've withdrawn from an unregulated broker, and it only took 5-6 hours, and maybe 12 hours maximum, which is so great. All the way to my crypto account, and from crypto to your bank account, it's so fast. So yeah, I'm not complaining, even though I lost this trade, but I'm not complaining. I should take responsibility. Maybe another solution would have been remove my stop loss during Asian session. Especially, I'm not gambling the whole account. I have only maybe 10% risk, So even if at 10%, I wouldn't say I would completely remove my stop loss, but let's say adding spreads. So for example, it's a 1 to 5. So let's make it a 0.5. So maybe I lose double the amount, but at the end of the day, or maybe even triple the amount, but who cares, yeah? But I don't think it's even possible for price to go all the way, because if we want to open the MT5 and NZDCHF, so yeah, we got I don't think the spreads are that bad though. I don't think they're that bad. Because it's impossible. Like if you have so many open positions, like it will be obvious. Like all these companies will close. If you have a stop loss above this 100 pips, it's impossible because it's for swing traders. They have 100 pips stop loss, so it's impossible for them to get stopped out. Even in unregulated, regulated manipulation, it doesn't matter because maybe you can cheat in 20, 50, let's say, which is so much. But it's impossible to cheat on 150 pips. It's impossible. And if you have 150 pips stop loss, or maybe even remove your stop loss completely, it's impossible to blow just because of spreads. And you should be fine, yeah. Unless you have so much capital, 10k plus, 100k plus, then yeah, you can go for regulated brokers. But if you have less than 100k, you should question yourself. Why do you have all that safety in it? Because at the end of the day, Forex is taking risks. So just risk the broker, yeah, risk it all. CAD JPY. So I had I'll just go through CAD JPY, but for CAD JPY, CHF JPY, and ZD JPY, all of these JPY pairs, they've given me long signals. You see, that's a support resistance zone. Resistance. I thought it made an H1 closure. Bullish, not a rejection, but H1 closure. And all of these pairs, CJ and NJ and CHF JPY, I thought, yeah, let's go long. But all of them got stopped out at the end of the day. It was a big loss. But I also, at the same time, had such big wins. For example, I was trading the Spain 35. That's an hourly chart. So it was a daily break and retest. So we broke this weekly daily zone. And it made an H1 rejection with another H1 bearish candle closure below the zone. So I had a stop loss above these wicks. And TP probably, my expectation was probably even make a lower low. But the end result was like in the following picture. That's a 4-hour chart by 1 hour. But it went somewhat into my TP, then London session open, it went into some profit, then it kept testing my when it reached, especially after this, when it came all the way to the 1-to-1 plus, and it retested my I didn't place a break even. I didn't want to have a break even, although that's a bad habit to be real with myself. But yeah, I was expecting maybe in the second retest it will go lower, but it didn't, and it just went into 0.5 risk, which is not bad, yeah. The win was big, obviously, I think, because I took some profits, so the count grew, and it's also indices, and when you trade indices on a $100 account, the risk, I don't think you're even risking $10 in indices. You're risking, depending on the indice, you're risking, and depending on the price of it, and your stop loss, obviously, the dollar amount goes different, yeah. So we made a $36 on a 0.5 risk. That's a break-even trade. So imagine if we went into the full take profit. This could have been a banger, by the way. Why I'm over leveraging? Because I'm in a win streak. It's $100 account, and I also like have a super good experience with this pair specifically, SP35, because it's clean. SP35, France 35, EU50. All of these pairs are clean, and they're even cleaner than FX pairs. So I'm happy to lose if I'm wrong, but I'm wrong. Sometimes I get wrong and I get punished for it. But I want a hard lesson, yeah? And I know that I will likely and probably end in a green result, based on the technical analysis at least, and the work I've done, and the preparation I've done prior to enter this trade. As you see, like, there's so much hard work behind these trades. So SP35 short, 2 risk to reward, 48 point stop loss, so H1 injection closure below weekly support resistance level at 11,500. H1 bearish engulfing candlesticks, sold the TP next lower low. Price went to the max 1.4 risk profit and reverse to entry. Didn't place break even stop loss and closed half risk luckily. So I think this trade on Thursday, I think, but I took profits on Friday, the euro dollar trade. I think that's the best trade I took in my life. Although I didn't make much, around 200 bucks. I kept adding, by the way, because I had the perfect golden entry. So I've seen euro dollar making a break and retest on the weekly support resistance level 1.007. We had a bearish H1, bearish engulfing minute 30 pattern, and I saw price in the middle of the zone. I placed a stop loss above the zone and take profit on the next support resistance zone. And to show you guys the so let's go back into the daily time frame. So that's how I drew my zone. So if you go to the 4-hour time frame, you see price clearly was having a support over here. And yeah, I've seen price going to support, bouncing, breaking, and I saw the golden opportunity to enter, especially at the minute 30. As soon as I saw this bearish engulfing pattern in this minute 30, and I had the golden entry in the middle of the zone, and it was also an H1 strong H1 bearish closure in the zone. And I had also like a middle of the zone entry, so I didn't enter at the bottom of the zone, I entered in the middle of the zone. So, and I had my stop loss, as you see in the screenshot, just above the wicks in the minute 30. And my take profit, so just above the zone, it doesn't have to be precise, specific. And my take profit was up all the way to the next support resistance zone. I could have also held it, but you know, I was in so much profit, especially in the different currency pairs, different running terminals. I thought, like, I've been in this position before, and I thought, you know what? I've had so many good I've had so many good decisions in the past, and I thought, why don't I just take the profit? Why not? Especially, it's not a 1-to-1 profit, it's a 1-to-3 profit. And I remember trading in a 200k account, 200k FTMO challenge, and I think I had so much profit, 210k, maybe 5% gain on the account. I just didn't want to, I was 200 balance, so I had a 5% active running terminal gain in the account. All I had to do is close all trades. All I had to do is just press the X button and I'm out. But what I did, I held them all. I held all the winners, and guess what? Although they didn't run and continue into my winners, into my full TPs, and also they didn't go to my lose, but some of them and a lot of them, especially the big numbers, went to break even, and the small numbers went into profits. So I ended up going back from a 5% winning day all the way to a break-even day just because I didn't close the trades. And that was so painful. So I told myself, look, bro, you have 200 bucks. You didn't double the account, you tripled the account. So, bro, just take your money and go out, yeah? That's what I did, and I'm happy with the decision. 3 risk to reward on euro dollar, and you know I nailed it, yeah? I was literally out in this week. I nailed it, bro. I nailed it. Top G trades, yeah, I nailed it. And it went all the way back to the middle of the range of both of these zones. But yeah, I'm happy with the decisions. And next trade, hey, instead of winning and losing 10 bucks, I will win 30 bucks and lose 30 bucks. And you know what? I wouldn't even win and lose 30 bucks. I will win and lose 60 bucks. Why? Because that's how I play the game. When you win, you risk more. When you lose, you risk less. Or you don't even risk less, you risk normal. So I risk 10%, and that's it. You don't want to live a life of risking 1%, being especially if you're not a funded, even if in a funded account, unless you have 400k, even on a 200k account, you're still working, and I respect you for doing that, because it takes so much time, and it also takes so much effort, and it can be guaranteeing in some way, because you're only risking 0.2%, or 0. I don't think anyone on this planet risks 0.1%, but you're risking 0.2%, so you're taking the long route, and you're actually going to guarantee, especially if you have a working strategy, you're actually going to guarantee a win and the capital preservation in the long run. But it's only $1,000, and in $1,000 account, unless you're a scalper. What do I mean by a scalper? I mean by somebody who trades minute 5 charts, and you're actively trading 8 hours a day, 5 days a week. Unless you're that guy, unless you're out there trading for real, bro, you shouldn't risk more than 1%. So 1%, 2% risk is for the people who actively trade, or they have, I don't know, they're in the defensive side in their life. Maybe they're 50 and that's it. Yeah, they can't lose their capital. Or maybe there's somebody who's scalping, so they're sitting on the desk for 8 hours a day. Although they also day traders, they also sit for 8 hours a day, because you take. So I took this position. So how long this position took, especially after these candles? So it took almost a full day, yeah, to my take profit. So we're also under stress. Everyone is under stress. But it's more stressful when you're trading, when you're scalping. And from what I've seen, scalpers, they don't even scalp FX. Some of them do, and they make it work. They're scalping with the trend. So let's say we go to the daily. So on the daily, you see, for example, you see these. So you see a break of structure, and you see it's making lower low, lower high. So you go to the minute 5 chart, for example. You zoom out on the daily, or maybe even minute 15. Yeah, so you go over here, and you see minute 15 resistance, but in actuality you're doing minute 5 resistance. And although like it's I've seen people do it and it works. So how many pips is that? So that's 10 pips, I think. Yeah, so they're trading this way, and they're maybe putting a 1% risk, trading 1-to-1. You see, you can barely even scrape a 1-to-1. So you see, that's the minute 15, minute 5 support resistance. They're doing a 1-to-1, risking 1%, but it still works, yeah. Nothing wrong with that. But you see, you don't find sell opportunities and the trend is bearish, yeah. So you only want, especially if you're scalping for sells, you only want to sell. You don't want to buy. Why? Because the trend is your friend. Although you can look for buys, but you see, if you try to buy over this support, yeah, you could have, because you don't see what's the next candle is going to print, yeah. You will easily get stopped out. So you only trend with the scalp with the trend, and you never know when the trend is your friend. Sometimes it's your enemy, it backstabs you. That's how it goes. Sometimes it's ranging, yeah. Now especially it's in the zones already. So euro dollar, you can't. Maybe you look for buys, especially after this, when it grabs all the liquidity. Not even at the beginning of the. And you have to have experience. You have to be specialized in trading this strategy only, and you should do it. I think people do it in futures. So futures is better for. I've seen people like Thomas Crowell. Everyone knows Thomas Crowell. Let's go on YouTube. The crypto guru. So that guy, he have a course, trading course, and he he knows how to scalp, and he was actually a full-time scalper. This is why I'm recommending. I don't even know who's this guy, but this is why I'm recommending him, because he's a scalper. He knows. I've seen his course, and he knows how to scalp. So let's analyze German 40. So we took on Friday morning German 40 short, daily support resistance level. As you see, it's a little bit difficult to see, but in the daily, so what I've seen this, you see, one candle, two, three candles, daily candles. So I anticipated price will find support in this level, resistance I mean in this level, and I went into the 4-hour chart. I draw a zone like this. I've seen already 4-hour variation. I think, how did I enter this trade? Yeah, I've seen minute 30 engulfing, and I saw price already in this zone, so we have a good entry. I placed my stop loss in 19,506. So the stop loss was above the zone in German 40. So the stop loss was over there, 19,506. So it was all the way above the zone, and the TP was all the way to the next support resistance zone. And you look at the trade, how it plays out. Boom, we made almost 1 to 3 risk to reward. So I was in a winning position in this. The blue line is where I trailed my stop loss. It was based on the minute 15 structure, as you see. So this was the blue line. So if it breaks, then it will likely go all the way back to my entry, and I don't want that. So yeah, to secure profits, active trade management is mandatory. Everybody knows it already. And I'll go finally on the GBPAUD trade. And by the way, I promised everyone for a weekly outlook at the beginning of the video, and I will do it, but I will do it on a part 2. So this will be the winning analysis. So how I tripled my $100 account, something like that. And I will make another video for the Sunday weekly analysis. So that's a GBPAUD weekly level 19.5, and yeah, that's how the result. You see, that was previous resistance. It was a big weekly key level, but I got them all precise, and I just saw the entry confirmation. You see the hourly engulfing, first hourly engulfing, second hourly engulfing. I've seen 4-hour bullish engulfing closure on GBPAUD weekly 19.5. Immediately, price immediately went into profits, as you see. And we made how much? I'm not sure. So I was in 3 winning positions and closed all of them. And that's how the results of hard work and dedication. Thank you guys for watching, and I'll catch you guys on the next video.